How's it going, guys? Christian Baptiste here, CEO of IWC FX. So, if you guys haven't, go ahead and go over the soybeans institutional. We're just going to go ahead and do a little recap on what was left. So, we see how the market opened up today for this week. So, we had corn. Bias was a continuation to the downside. But we'll go ahead and take a look at what I was talking about.
Small money was previously selling here, so this is why you're seeing the price action. Strong bearish, strong bearish. This is price action previous. So you can come back to doing the same thing you did here. That's great. That's doing the same thing. It's just I'm making money to the downside. I track someone up here. I'm making money both sides.
So we had this continuation to the downside, this continuing to the downside for corn and wheat. Here we go. Had wheat trying to give us for the beginning of the week if we could possibly get a retracement, but overall the continuation to the downside is the bias that we wanted for wheat and corn. So let's go ahead and talk about that. This is corn. Corn, like we said, we wanted the continuation to the downside. Market was strong, bearish, because we're coming back to his previous point that we had identified. So strong bearish from a high smart money institutional level. So strong bearish reaction for the beginning of the week. We got Sunday, Monday. We got the market clearing these lower level sellers and last minute trap of the buyers that we had talked about in the video. So these guys all got hit, as you see, with this impulsive move to the downside, because that was there for a reason. After getting these buyers in, trap those buyers, now go hit those buyer stop losses, even trap them one more time. So that's what the smart money did here for soybeans, and you should look for a nice continuation, taking out these lower level guys here now for the rest of the week. For soybeans, you should have a nice bearish trend for soybean. Let's take a look at wheat. Wheat didn't give me much of a retracement that I was looking for. I was looking for a deeper retracement. Didn't give me much of that, but overall held the high of the day. See here how it was set, and continue that bearish reaction for New York session. Went ahead and tested that high of the day, but did not take it out. Continued back to the downside. And this is where we're at now for wheat. So definitely cleared these buyers. Cleared these buyer stop losses, came back, try to trap them one more time at break even or not, see if they could get cleared up, but then they set up. You didn't have it in you to close, so we came back and took their money. So that's what we had here for wheat. We talked about it in the video, so go ahead and watch that, and then you can see where we're at now in the market. How we had that continuation to the downside because of the market holding previous highs, going to continue that trend for the beginning of this week, which continue bearish throughout the week, possible until next week, and then looking for some pullback. We go ahead, we chop it up with pound odd, which is trade that we took today, and we unloaded on the pips for this for pound oil. Gave out massive pips for us with multiple entries. We're on this for London session. Actually, a little earlier as well. We got, just about 8 pips, closed out, got back in, and then we got it at all our money. So go ahead and talk about pound oil here as to why we got into this buy. But overall, like I spoke about in the previous video of how the market likes trapping you guys, retail traders. Did was extend the high of the week. All this impulsive move was to trap buyers in, hold the buyer's position at a higher level, don't release them, then trade away from them. What did we speak about yesterday about this retracement is what retail traders are doing. They catch the fib, high to low, catch a retracement, buying that, and then these stop losses are then going to get hit in the future. These buyer stop losses are putting their stop loss in this range. What do you think the market's going to do? Going to go hit and run through these buyer stop loss as you see this in the future. So that's what you had there for pound oil, running through seller stop losses, which was running through the high of the week, trapping these buyers with this impulsive move. High level buyers are now trapped. Now we're going to go ahead and trade away from them for a nice bearish trend for a nice week. So that's what you had on pound oil. So after that, it's finished. After they did their trend, they now said we have too many sellers. So now we have to switch and reverse the trend and take some of those profits away, as well as making money both sides, trapping buyers and sellers. So here we got lower level buyers, lower level sellers trapped at a low. And you see the overall double bottom being in place here. So lower level sellers are trapped, and the market is now going to trade away from them. And as you see here, there's nothing here that should stop the market from going on up. There's no bullishness in the zone. So what does the market do? They do cause a retracement. They do put the brakes on. Now who's that? It's nobody but the market. Nobody but smart money saying we have too many buyers in this position at the moment. So you know what? We're going to go try to get their stops. Go, pound all the retracements, the massive retracement, from here to here. That's, oh my gosh, almost 100 pips back to the low. So that's exactly what the market did. They said we have too many buyers in at the moment. In line with this sell scenario, right? We're in line with the sell scenario. Let's go ahead and trap some more sellers. Let's give a reason for sellers to sell this. So they go ahead and double top for the day, validate this exponential moving average, which is my 50, to gather sellers back into this trend sell, let people know, oh yeah, we're still going to be sellers. And what these guys did went back to their low, which they had placed, went back to their low and failed to go lower. They failed to go lower because they have more lower level sellers, money trapped at the low, than higher level buyers. It's not a lot of people buying, but there is a lot of more retail people selling because they see this. So the market maker said, all right, we can make money this way by being greedy and going right back to our same price action that we had shifted away and tried to see if we had enough sellers in. But he said we could trap some more. And they did. They did trap some more. And they did not release the lower level sellers, although they did gather sellers in, but they said we're not going to release these lower level guys, these guys. So there's more sellers in than buyers that they didn't want to go and release these guys. So we got more money trapped below here. So we're going to go ahead and shift away from those lower level sellers. Now, this already signifies the bullish trend. They held lower level sellers and they no longer want to release those guys. So now everything coming back to this point is to continuously try to trap the sellers to hold on to their position. For example, we've been in this in the past. If you've been in a trade where you thought the market was going to go your direction, draw down, then he comes back near your position. Now you're a little less in drawdown, even maybe could possibly try to get a break even close. But then the market somehow just does a quick shift away from you again. So this is that scenario that they're doing. When they continuously coming back after trapping the money. Money is trapped at the low. They're going to shift away and going to try to trap some more money again. But when they do this and they fail to go lower than previous low, there it is. Again, an indication that we have lower level sellers trap that we do not want to release. So a buy is all you want to be looking for in this market on pound oil. And this was Christmas time. The market set up beautifully, ended it off the bearish cycle, caused the low, and now had everybody looking at the sell. Now this is a beautiful time to be trading away from that. So the market went ahead, created a low, consolidated after creating the low, again, holding the high. So again, trying to get those sellers in. What did the market do? Gather the sellers in by going towards previous low and failing to take it out. So we have it here, previous low, failed to take it out. We got a nice bullish engulfing candlestick. This is a 1 hour chart. That is a beautiful candlestick for an entry point for 1 hour time frame. What do you have here? What did the market create? A double bottom multi-day. 2-day same low being held. This is a strong move to the upside is coming. This is a strong upside potential coming for pound oil. You know that these sellers, these sellers' stop losses are all about to get hit. Because these guys' stop losses are in this range. The market goes up to the upside, takes these guys out. Okay, so we got what we wanted. Took them out, exactly what they wanted to do. Then they said, you know what? We're going to go ahead and trap some more people to the downside. Boom. But when we trap these guys, we are now using this previous trap of lower level sellers as support. So these guys, we don't want to release these guys. We're going to trade right above them where they think we're going to come back and try to release them or even get close to break even, but they're not. This is the whole scenario right here. This is the whole agenda, to hold these lower level sellers. And the trap sellers here. Again, coming back down. Don't take out that low. Holding this low. And then go ahead and trap sellers one more time, creating the low of the day and coming right back to it and not taking it out. And that's where we had bought into that. As you see here, trap sellers, trap sellers, trap sellers one more time, double bottom. We have bought into that, low being held nice. As soon as he came, tested it, bought into that for London and caused that breakout to occur. And we accumulated GA 143 pips. First entry, we had a buy stop. As you see here, buy stop, and that accumulated for 120 pips. And we definitely took our pips. GA over 200 plus pips on 2 entries. So you got over 263 pips with 2 entries. And this is where we caused that lower level sellers trap, and we got the breakout to the upside. And we took our pips, we closed profits for the end of the day. This market is still doing its thing, but we took our pips. Sunday, Monday, you know, great start to the week. Great start to the week. 263 pips on this. On top of, as you saw, we took 50 pips on gold. We sold gold to the downside, took 50 pips on gold. So great 300 pip netted for the start of the week. And this is just the beginning. Today's Monday, guys. Today's Monday. We got 300 pips for the week already. So we're already keeping nice and calm, chill, on cruise control now. So definitely, if you like what you saw, give a like, comment, subscribe, email if you'd like to learn more. If you didn't see the previous video on wheat and corn, go ahead and check that out so you can see more in depth what we was talking about, how we got to the zone for a nice sell opportunity for soybeans. But other than that, hope you guys enjoyed this. Let me know what you guys think about it. I hope you guys have a great trading career.